All right, just getting a little last minute something coordinated here, and let's get going on this morning's opening tactics. So, again, it looks like the outage is still ongoing. When it is not, when Adobe Connect is accessible, I will announce it here in the YouTube room, and subscribers will be able to switch over. Hopefully, sooner rather than later. There is latency here. Just be aware of that, but go ahead and post questions in the chat as you would normally. I'm not really wild about getting involved right away. I think the market's going to be monitoring for whether or not exchanges open normally, considering the challenges seemingly being faced elsewhere. They're all pretty positive about it, but remember, a couple of things to pay attention to here. Overnight price action influences intraday during the first 15 minutes and afterwards not. With a couple of exceptions that aren't going to be relevant here, I don't think. So one of those is the overnight range, the hovering that developed initially. We had an outstanding attraction above at 56.08 that was neutralized already. There's still something else outstanding above at 56.23 that if buyers can get any kind of traction, I think that's where they're headed. But probing into this initial hovering range by 61.8% and no higher, not really interested in a long. That doesn't necessarily mean to short, but then the other thing to pay attention to is, well, I said that the overnight doesn't necessarily influence intraday. There is that one masochistic tendency of the intraday market to duplicate an already recovered overnight drop. It's not a requirement, but if we're not getting out of here through the first 15 minutes back into positive territory, trending up, then that's going to be an attraction below. So I will want to look at, as soon as we're pretty comfortable that exchanges are open, look at this uptrending support. Last touch comes in at about 93, 91.50. I'll probably have an actionable level around 91.50, 90.75. At least to get us back down to 78, 77, and then take it from there. As far as the upside, I'll want to see that. I want to see some evidence. So any questions about that, just keep monitoring the screen, and I'll have levels labeled, like I've already got levels labeled here, just a little closer to market action. Any questions, please post them in the YouTube chat. Good luck today. So, by the way, here I'll go ahead and drop the recording. So here is the pre-open. There's the recording if you missed it or want to go back and watch it again. I'm going to go ahead and just basically identify, at least right now, all else being equal, 56.0506. That's basically where a buy signal is going to be at all attractive. But there is no fade, no opening buy on weakness, nothing no fade long entry. All right, again, any questions, please ask. So as we come into the open, already breaking uptrending support, already breaking the last or probing the last touch. Remember, overnight constructs, overnight price action and their formations are influential intraday only during the first 15 minutes through 9:45. Anything beyond the first 15 stands on its own merits. So if the first 15 manages a break under the last touch of this uptrending support or the last touch of this uptrending support, if that's going to be managed as reversing momentum down, which is what we'd expect, because trendline breaks don't reverse the trend, breaking under their last touches is what reverses the trend. If that is reversing the trend, then that will be maintained through 9:45. At 9:45, to have recovered this break or these breaks now, and I'm going to go ahead and identify a buy signal, a lower buy signal, stop, whatever you want to use it for. If that's recovered, then that'll be it for sellers. But otherwise, sellers are entrenched. Remember the bounce that we looked at yesterday, the buy signal here, coming off our 5570 target, the bias down target. The bounce or buy signal was only going to be temporarily productive to whatever degree. It neutralized its attraction at 5608 overnight to within 2 ticks. 3 to 6 ticks qualifies. So this overnight retest of the low, if it is on news, that can suck the oxygen out of other trades, other sponsorship. But I'll still give it a benefit of the doubt that the intraday wants to get that done as well. Now, this being expiration, there's some other interesting influences. For instance, an expiration influence is if the first 15 minutes are discernibly trending, if there's any discernible higher highs, higher lows, lower highs throughout the first 15 minutes, that can be predictive of the session. So right now we've got kind of a lower low, lower high. The spikes can be counted. They qualify. Lower low. If that remains discernible as downtrending through 9:45, that could be predictive of a downtrending session throughout the day. Kind of like a session-long decline. Like Wednesday had triggered, and then also influential to the next morning's bias window. But if buyers catch any kind of updraft, anything, and by the way, the bounce limit right now is 85. 85 bounce limit. Counting the minutes, probing above 85, the usual attention span of weak-handed counter-trend sponsorship. 4 minutes during the first hour, 3 minutes any other time of day. They can be minimum 4 ticks. They can be pretty substantial. They can be just a minimum 4 ticks. This could be multiple points of just counter-trend sponsorships, attention span, which is also strong-handed sellers, patience, letting them have more rope to hang themselves. Buy signal disqualified during the first 4 minutes, testing a bounce limit. If now all 4 minutes, the usual attention span of weak-handed counter-trend sponsorship doesn't have to be spent bouncing. If we can get off a short near the high, at the high, 1 or 2 point buffer, room for noise above the high of those 4 minutes. Doesn't make it any likelier to reverse down, but it is so much closer, the closest possible to where we'd know it's wrong to be short, making it very attractive for a short entry with a stop. Have to have a stop. What exactly is frozen? You're saying something's frozen? Anybody else? Screen frozen? So we're in the 4th minute. Looks like the 4-minute high's plenty of time to take it out, but is currently 90.50. 1 or 2 point buffer, room for noise, coincides at about 91.50. So really anywhere in here in this 90-91. The 4th minute doesn't have to be the minute, but while waiting for usual attention span to lapse, retest of this 90-90-50, 90-91. Really attractive short entry because it's so close to where we know it's wrong to be short, which is more than 2 points higher above 90.50, or at least I don't want to give sellers any benefit of the doubt at that point. I'd rather re-enter short. I'd rather be flat, the smallest stop loss possible. Now above 95.50, I would start to give buyers a benefit of the doubt. I'm not going to have a very aggressive buy, so it's not a stop and reverse to long. Too big of a bounce, so it's already taken out the short entry. You can always re-enter short, and I'll identify that entry parameter. As soon as the buy signal is probed by at least 4 ticks, we can start a 4-minute countdown. The high of those 4 minutes, would if it's exceeded, would represent reinforcements. This is otherwise an attractive short entry. I'm not interested in it, but attractively priced, just because it's so close to where we know it's wrong to be short. But now it's probing it by 4 ticks at least. So there's a 4-minute countdown. During that 4-minute countdown, sell signal is disqualified from triggering. Can't be doing both. A bar can't be detouring back under its buy signal, which it's allowed to do during the first 4 minutes, while still testing the buy signal, and the same bar triggering a sell signal. One or the other. So right now, 4 minutes countdown underway. Until that has elapsed, a sell signal is disqualified from triggering. If you're taking the buy signal, it's entirely viable. Just know that the 4-minute high has to be exceeded as well to represent reinforcements. Coming into resistance, the 61.8 retracement of the overnight range, or really just the upper end, but the 61.8 retracement's in here at 56.0506. Pullback limit is 5,600 half. So if you're waiting for all this to settle out, as soon as either signal exceeds its first 4-minute extreme, that's reinforcements. That gets every or greater benefit of the doubt that it is extending in that direction. Until then, and during the first 15 minutes, it's still trying to find its footing, chipping away at either end, testing its parameters. And the overnight range still plays. So at 9:45, back under the overnight range, it's being tested now. It didn't have to be tested post-open, but it is. As long as it is, if it's not exceeded at 9:45, it's holding. That is, at 9:45, back under 55.99, 5,600. Back under 59.5600 or 99.5600 at 9:45, a couple minutes from now, will indicate that the overnight range's initial resistance has held, that this bounce has peaked, and that momentum is reversing back down. So interesting. I'll take this as a vote of confidence, sigh of relief, relief rally, in fact, that the that exchange is opened. I'll take the market's word for it, that things are operating smoothly. Let's check Adobe. Nope. But there's a 4-minute high to testing an inflection. An inflection starts a countdown of counter-trend sponsorship attention span, contained for 4 minutes. Pullback limit, same thing. Measuring attention span, allowed 4 minutes. Now, we're 3 minutes through it, so if you want to make a value judgment, so far off the high that most responsible stops are already triggered. Should be. Let's see if we can't get a bounce. Oops. So much energy expended during this first 4 minutes of testing the pullback limit. See if we can't get this path traced out. Not really seeing any big bounce, but definitely hesitation here at what we know to be a relevant level. Also, the first 4 minutes of the usual attention span of counter trend sponsorship. So it's not contradictory indications. It's two contradictory setups waiting to be triggered to become an indication. Either this 4 minutes holds, which is like proving a negative, it just has to recover. If it starts recovering back above 95.50, I'll assume, give it a spread, 96, 97, I'll assume that this dip has held. I'd like to see it bounce to 95.50. If it does, then back under 91.50, I'll assume the usual attention span of counter trend sponsorship has given way to stronger handed sellers. So basically decision point here. At this point though, any fresh low at the latest under 85 gets every benefit of the doubt. That momentum is reversed down. All right, so this is what I'd expect to see in both situations. That the 4 minute low, usual attention span of weak-handed counter-trend sponsorship under the pullback limit be maintained. Having run its course, sellers no longer attracted, buyers no longer patient, and back up we go. Now that we've returned to this original inflection, so long as it's being overlapped, it's not actually being recovered. So we haven't yet disqualified that back under 91.50 would actually reject, would indicate that these sellers, weak-handed or not, had now attracted stronger-handed sellers behind them. If you want to be less sensitive here, 90.75, 3 ticks difference could be the most important 3 ticks in the world. But this bounce is also the behavior I'd expect to see when the first reaction down from the previous trend's extreme was so productive and yet intends to resume. It still wants to correct. So that's the correction. In the bearish scenario, that's the correction. Preliminary sell signal under 90.75, 91.50. Confirmation under 85. So let's have just a buy signal that tells us that this is a natural pullback limit trying to recover. That's 55.99. I don't think we're going to be managing or monitoring as granularly after we get out of the open. The first 15 minutes, by the way, didn't produce any discernible trending. We had some lower lows, lower highs working on that got shot out of the water. So there's no binary choice. Either the setup formed or it didn't. There's no meaning or default meaning to it not fully forming. We are monitoring the second 15 minutes versus the first 15 minutes as to whether either end of that first 15-minute range is probed. It hasn't been. little too big of a bounce now. Bigger. Almost back to, and now back to 55.99. Not yet piercing it by at least 4 ticks to start a countdown. As far as we know, it's being tested as resistance. Second 15 minutes, still stuck in the first 15-minute range. No momentum here. Even the lowered 90.75 was still pierced by a tick, but only by a tick. No 4-minute countdown. Couple ticks. So, a little bit of noise here, not a whole lot. But I'd still give 90.75, not so much 91.50, but 90.75. Benefit of the doubt if overlapped. The one thing that really concerns me, if anything concerns me about this setup, is we get out of the open, the market's found its bearing, and its bearing is to remain in this little range, which is entirely possible. And on expiration, it is extremely possible that expiration morning just fluctuates choppily sideways. I'm still giving a benefit of the doubt, if not to buyers or sellers, to strong-handed sponsorship either way, that it's going to knock out a resolution to this range sooner rather than later. So getting rid of the guidelines, we've already used them. The labeled levels are the signal levels. Sell signal probed, multiple points, at least 3 ticks, 3 minutes, even deeper. Buy signal probed, no higher than its first 4 minutes. Sorry, not 3, 4 minutes. Now in this range, we haven't had a trigger. We haven't even pierced either buy or sell signal by at least 4 ticks to start a countdown, let alone to exceed that 4-minute extreme after the countdown begins to indicate that reinforcements had arrived. Yeah, Bitcoin is probing the 65.1 resistance. This needs to be exceeded for a 24-hour window. It's like closing, the equivalent to closing above it. Its objective being basically 67,000. So on a very aggressive basis, it's a long entry with a stop. I don't really, 67 is a pretty solid resistance if it's even attacked. I don't really have great trade-off here in the stop. The stop would be under 64 too. Not a great ratio. Solana, by the way, still outperforming, continues to outperform, and noticeably not just in pulling back um, pulling back more shallowly or less steeply, less substantially, but actually continuing to higher highs. So we're through the second 15 minutes. Second 15 minutes contained entirely within the first 15 minutes. There's no momentum here. Now the first half hour's range can be exceeded by the second half hour's range. It's not at all the same quality of signal. But it is also interesting to note that during the first half hour, if not the first 15 minutes, that what was relevant then actually no longer influential, other than any artifacts it has left in price action that did develop. That is the 61.8 retracement of the initial hovering range overnight. If that were exceeded, we would be looking at 56.20s by now. Not only was it not exceeded, there were attempts to exceed it that failed. And that's really what's bearish, not that it wasn't exceeded, but that the market tried to recover it and failed. So even in the most bullish scenario, with that not just inability to recover relevant resistance, but failed attempts to recover relevant resistance, even the most bullish scenario that we could look hours out and see that it's been recovered, the path there probably drops to find stronger-handed buyers to sponsor that leg. And that's if the point is even to recover that resistance. The point may just be to have refueled sellers to extend down. So either way, I give sellers a bigger benefit of the doubt. The attraction back to lows, bigger attractive value. And by the way, if all of that is played out, the lower lows having a bigger benefit of the doubt, the attraction to prior lows having a bigger benefit of the doubt, if that all comes together in time, at 10:15, the bias down signal could trigger under 55.80. Under 55.80 through 10:15 would trigger bias down and put into play its 61 bias down target. Now, a test of 55.80 that doesn't trigger would put into play an offsetting test of the bias up signal. One other pattern I'll point out, since we're just sitting here in a range. If nothing develops, if the morning doesn't produce a fresh extreme beyond the first half hour's range, or probes of either end of the range don't extend, especially in a no bias window, if nothing gets going by 10:15, then we'll apply the alternation rule to the afternoon, and we'll expect a singular trend, a significant singular trend to develop. So not just because of morning chop, but the morning chop has to actually respond to relevant levels. So far we are. The follow-through, the immediate follow-through, multiple point follow-through, beyond inflections, or in this case, for instance, literally inflecting at the inflection. These are all calculable levels based on the same Fibonacci scheme within this range. If that is basically foreshadowing the rest of the morning, if this is what the rest of the morning looks like, all else being equal, fluctuate in a range, then the afternoon will become that much likelier to trend. And could happen as soon as coming out of the morning, as soon as going into the noon hour, no later than coming out of the noon hour, that a singular, overtly large trend develops. That would be the alternation rule. Not there yet, but just at 10:15. If this is what it looks like at 10:15, still stuck in the range, it's already been responsive enough that I would expect that. Coming into 10:15, the 10:15 bias timing window, the AM bias, neither bias signal having been touched. We're really operating off of just other structural clues. The overnight test of the bias down signal, irrelevant. The overnight test of yesterday's lows, more relevant. So rock, hard place. Timing window, as the saying goes. Should. Will. Anyway, 3 minutes out. Neither bias signal touched. If neither bias signal has been touched 3 minutes out from after 10:15, the next hour will be a no bias window. And if either bias signal were touched during that window, it would likely hold and reverse back into the range. Also, we've seen enough responsiveness to relevant levels that if this is what it looks like at 10:15, and if the balance of the morning honors its bias signal containment, testing the bias up would reverse down, testing the bias down would reverse up, then coming out of the bias window or during the noon hour itself or coming out of the noon hour, any or all of those, at least once, likely to produce at least one significant trend. So literally a 30, 40, 60, 70 point leg in one direction or the other. Touch either bias signal within 3 minutes of 10:15 and it'll invoke the grace period, and everything that I just described will apply to 10:30 instead of 10:15. Be right back. We're going to do a bigger picture review after we get through the bias timing window, which or enter it, which we now have. It is officially no bias. Unless either signal, the bias up signal above, the bias down signal below, unless either one were probed and broken through 1030, this is no bias, and either bias signal, if tested after 1030, should contain that test, reverse back into the range. We'll game out what the possible and actually likelier resolutions are coming out of the window, out of the bias window, into the noon hour and out of it. We'll also look at the bigger picture which we're going to do, of course, in greater detail tomorrow morning. But I want to go through precious metals again, crude oil, some interesting behaviors, and also the long bond. Any questions, please post them. I'll be right back. So you can see on the 3-minute chart, you can see the test of the bias down signal. It's already a no bias window, but it's 10:30. It's not yet 10:30. There's still time to invalidate the cleanly triggered bias. If at 10:15 a bias triggers, it can still be invalidated at 10:30. It's too late to trigger. Now, it's too late to trigger bias down. This needed to have been probed through 10:15 in order to trigger. But if it's probed on a delayed basis, if it's probed now at 10:30 and maintain that probe, that invalidates the no bias. Bias parameters still relevant. These are calculated from patterns. They're actual supports and resistance levels and attractions, but there's no requirement. If we wanted the assurance that the bias down target was in play, bias down signal needed to have been triggered on a timely basis at 10:15. Bounce limit is 77. It's at least breaking lower by 10:30. I'm assuming it's going to be maintained. It may not be. If the bias down signal is touched during the 10:30 bar, even 10:31, I would be highly suspicious of this extending any deeper. But that's really the line in the sand. So long as 5580 doesn't recover by 10:30 or within a minute, there's no late bias down. It's too late for that. But the bias down signal would no longer require holding. So first things first, let's see how 5580 goes through 10:30. Break maintained. The no bias is invalidated. Invalidated no bias. There's no objective. There's no requirement to hold the bias signals as support and resistance. And there's no attraction, no requirement to test either, the bias down target. Too late. Needed to have done this, precisely this, by 10:15, not 10:30. But this invalidates, since it's being maintained through 10:30, the break under the bias down signal invalidates what was done on a timely basis through 10:15. So the bias down target doesn't require being met. It can be attacked. It can be exceeded. 55, 60, 63 is our next lower target as it happens. Bounce limit is 75.75. And by the way, price can just turn right back around and bounce from here. Wide open. So just the inflections do the talking this morning. Bias signals, if attacked or touched, should be influential. So let's look at the bias, just to be clear. This is actually an invalidated bias. This will be updated to reflect invalidated bias. That is, the bias signals were 5610 and 5580. Neither one was triggered by 1015. Neither one was triggered by 1015. But as of 1030, whatever was triggered cleanly at 1015 is negated. So there's no requirement to maintain the bias signal as support or resistance, or to extend to the bias target. So we're not trading the bias. It is interesting. The bias signal and target are still relevant supports and resistance levels, but there's no predictive value. Breaking the bias down signal by 10:15 would have predicted extending to the bias down target. Holding a test of the bias down signal by 10:15 would have predicted an offsetting test to the bias up signal. Those aren't in play. Bias down would have required holding the bias down signal as resistance. That's not a requirement either. But it's still resistance. And until the bounce limit is exceeded higher than its first 3 or 4 minutes, the usual attention span of weak candid counter trend sponsorship, resistance is likely to hold and the decline likely to resume. I wouldn't have a stop much higher than 81.50, 82. Can always re-enter short. So RSIs are diverging positively. Actually, 1 minute RSI is diverging positively. 1 minute RSI never got oversold on this last bounce that 1 minute RSI did. So its positive divergences versus the opens dip. At first, that's not bearish necessarily. That is sellers calling for reinforcements. Sellers are calling for reinforcements to take price lower, keep it its momentum pointed lower, to take RSIs back into oversold territory, because if this formation then produces a fresh price high, then it becomes bullish. So at first it's a call for reinforcements, but it is constructive to a buy signal if one triggers. Sellers still getting every benefit of the doubt. So I won't be stepping in front of higher or lower lows and lower highs. Here's lower lows. If it remains parallel, here's lower highs. Running correction. Entered aggressively. If it's also exited aggressively, that'll give us a very predictable or highly reliable 5-stage pattern. Stage 4 being a trough at the end of this aggressive exit. Anyone else having a frozen screen? I mean, this is YouTube, not Adobe. We've got a bounce limit test. It's being violated. Right back up to resistance. It's a invalidated bias. No reliable influence of the bias signal. But as we start coming out of the bias window, another 10 minutes, 10 or 15 minutes when the bias window lapse starts coming into view. This was contained. The only probe beyond was an invalidated sponsored leg. This little running correction, lower lows, lower highs, not very credible for a reversal. So I'm going to get aggressive on a sell signal. As far as a buy signal, we don't have any bias, we don't have any attraction or limitation. Here's a 3 or 4 minute high, 1 or 2 point buffer, room for noise, coming in pretty much identically to the bias down signals resistance. That's just not a very attractive inflection candidate. It really tries to absorb energy instead of repelling it. So really not a good candidate for an actual inflection. But it has been sliced through considerably. I'll come down here to 85. Keep in mind, any signal needs to be exceeded beyond its first 3 minutes. Minimum 3-tick, 3-minute probe. That was 4 by 4 during the first hour, but it is 3 by 3 logic during any other window. So this is why I don't generally trade around a bias parameter. It's more of an attraction than it is a repellent. This is still a running correction. Just because it broke higher first doesn't mean it's not still identifying an extreme degree of sentiment. But we are now returning to 72. 72 is going to be an inflection. Low, retested. Whether to take it on its first test as a sell signal rather than waiting for some sort of bounce now that we're sitting at this relevant support. Not much jostling, but a little bit. This would be a more palatable path. Just expended a lot of selling pressure to 10 points of selling pressure, 10, 11 points of selling pressure in a few moments. So, or at least 6 from here. So I'd rather see a little bit of firming and then a failure. Not that it can't just extend down and bounce from a lower level. But again, the bias window still not within view of lapsing even. Starts lapsing at the bottom of the hour. Comes within lapsing or within view of lapsing in another 4 or 5 minutes. And whatever the path, lower lows remain likely. Now, since the market is producing, trending, extending, the alternation rule for the afternoon won't apply. The morning did produce actual trending. So a morning chop is not waiting for the afternoon before producing trending. So see to what degree. 55, 60, 55, 63 still the next lower attraction. Yeah, so let's go ahead and look at other markets right now. We're seeing, I think, a flight to safety finally, at least in the dollar. The yen, though, has reversed down from my sell signal. That's a little different issue with the intervention. Interventions just don't work. Long bond, not seeing, not on the long end, a flight to safety, but I've had this pullback objective outstanding for over a week. Really want to see 117.16 tagged before any kind of a buy signal is credible. And in that interim, since creating that attraction below, there was a bounce back to the prior high. There we go. Back to the prior high. It held, forming a double top. So I think I anchored this a little wrong, but it's a nice, really nice measurement. Crude oil still hovering at resistance, likelier to extend down to 78.80, whatever its resolution. I'll take as credible a close above 82.90 if it can ever produce it. But meanwhile, Gold, entirely credible rally we've been tracking, but when we got to prior highs, since it was a relentless rally, and two instances of prices reversing down. In fact, the more aggressively that this area had been tested, the likelier to reverse down. So these were only the weakest hands that were buying the market up in gold back to prior highs and higher. So the steep reaction down, not surprising. So we're testing basically 2402, 2412. I mean, I really don't care about the noise down here. It's a pretty aggressive reaction down. Really looking at the proxy gap, the proxy for the gap from yesterday's close to today's open, the 61.8 retracement, back above 24.28.35, 24.29. I would assume we're at least going on to fill the gap. There's really no bearish reason to fill the gap in this range. It doesn't have to be filled. So if the market's on its way to filling the gap, it's probably also resuming its rally. Preferably, though, from this pullback. I don't want to see much deeper of a pullback before resolving up. And then silver, which still considering this a position of strength, that just had lost all momentum and needed to pull back. It had a not a likelier pullback limit, but just a healthier pullback limit, just maintain the range. If we'd started getting buying pressure off of 30.60, that would have been credible. But otherwise, next lower attraction being 29.95. That hasn't stopped. And the next lower, I mean, we're really trying not to be too generous to silver, but it is still a bullish market. It got out ahead of gold. Gold now has caught up with silver by testing its prior highs. Both are reacting down in unison, in tandem. They're syncing up. Yeah, let me get rid of this. Bounce limit, by the way, would be 70, 69, 75. So, silver and gold, silver having outperformed gold, gold having caught up to silver, both testing prior highs, now both reacting down, both still within the ranges. Neither one having any unfinished business below. Silver, in fact, upon meeting its target, bounced not too sharply and then all at once. And I think that's what undermined being able to attract more sponsorship reinforcements to extend higher. I think it's just basically resetting. It's all just noise in the range until this leg breaks higher. This being the last full traverse of the downtrending channel. I mean, this is 6 or 7 weeks of containing price action from one end of the range to the other. So if we're correct that this is a position of strength above, for as long as it hovered at prior highs without being rejected, it wasn't attracting stronger-handed buyers, so it needed to discount price, make it more attractive to stronger-handed buyers. Presumably it's done that. So this is a knife catch, though, kind of. It's retesting a prior low, so as knife catches go, it has more potential to actually bounce durably, and extend a recovery. A bottoming pattern could still form, and that is just delay waiting for 29.95's recovery or 30.60's recovery. Plenty of upside to silver if that does develop. I don't want to own either any lower. There's not enough distribution here to suggest or to rely on extending down. There's no swings in here that have unfulfilled downside objectives. That position of strength really undermines any lower objective. Any, for instance, under 29, 29.25, targeting anything lower, requiring it, just not enough reliability for that. So I'd rather be out and waiting for whatever it is to run its course, looking for another buy signal. And this isn't necessarily a buy signal in silver. It's a qualified candidate for a low. Same thing in gold. Pivotal level. It's a qualified candidate. If price had just drifted lower into this range, it wouldn't necessarily be any more likely to extend down. It would be more capable of extending down. But when so much selling pressure is expended all at once, there's no reinforcement. There's no defense against or attraction. It's just suddenly repriced, revalued. Yeah, let's look at what's going on here. So we are within view of the bias window lapsing. Bounce limit, 3-minute test up to 72.50. 1 or 2 point buffer, room for noise. A little late here, but 74 is a qualified inflection. $76.50. Now, is it actionable, this precise area? If I were building a position on a long, and I'm not suggesting at the moment to do that, I'm not yet convinced we're finished probing lower lows. If I were building a position on a long, I'd consider buying a little on a pullback, but definitely having a stop. Instead, just trying to time, now that we're testing a resistance, until 76.50 were exceeded, higher than its first 3 minutes. I'd still look for a pullback. In fact, we haven't even probed 76.50 by 3 ticks to start a countdown. Can't be doing both. Can't be probing a buy signal, allowed 3 minutes, including detouring, and triggering a sell signal with the same bars. So no sell signal is qualified to trigger at this particular moment. But get past this inflection test, get past its first 3 minutes. At that point, look at the time. We're coming into the bottom of the hour. The bias window starts lapsing. I'd expect one or the other at that point. 74 above, 68 below, to trigger and extend. I think there's one bite at the apple for a bounce. If this buy signal, now it's been fluctuated around, it's established a 3-minute high and low. This is the range testing it. Anything higher is reinforcements, anything lower is violating, no longer testing the buy signal. Under 68, counter trend sponsorship arrives, or counter to the buy signal. And above 77, reinforcements to the buy signal. So, especially since we're facing down the end of the bias window, and when the bias window lapses, big consecutive bars in either direction are A, likelier to appear, and B, more reliable for extending in that direction. Lower at the inflection. There's no reason not to give sellers every benefit of the doubt, other than it's not yet 11:30. We do have big consecutive down bars. I'd like to see that persist. I'm not lowering the buy signal at all, still not giving them any bigger benefit of the doubt. Their inflections continue to hold, not attracting reinforcements. Now this isn't clean enough for a 5-stager. This is still a running correction. Last point to make is the next lower target was 55.60. Recall unfinished business, the last bit of unfinished business outstanding is 55.60. That's been outstanding since the day before July 4. That's now neutralized. We do have some unfinished business outstanding from yesterday, but until this downtrend runs its course, Wednesday's close under this last relative low, 55.66.77, signaled a trend change. Yesterday's second consecutive close under 66.77 confirmed the trend change, now requiring at least an eventual third lower close in the direction of the trend change. And by the way, if today being a Friday produces a new trend close, it will require its own eventual lower close. Add to that, that's all developing at this prior consolidation, whose upper end has already been tested, already responsive, and necessarily, as I just described, would have to fail to hold again, which puts into play its lower end. Its lower end being 55.0209. That's the next lower attraction. Not today. Maybe we get there, but so long as today closes negative, under yesterday's low actually, then we'll be looking for 55.0209 at least. And that's not required to hold. That gets us into the orbit of some other unfinished business. All these levels like a bar tab coming due, telling us that this is built on sand. That's why in the last week plus, I started identifying topping patterns. That's why I started sharing the checklist of what we wanted to see that would tell us a top was forming. The first of those items was a universal awareness session. Finally got it last Wednesday. That told us we were closer to a top forming. And every day since then until Wednesday was probing a fresh high and failing. Until finally on Tuesday, no unfinished business was left outstanding above, and the market didn't wait for a reversal to form. We didn't wait to probe any higher and fail. It just suddenly collapsed. So while, and by the way, this entire rally, the entire rally since May 31's pivot reversal, never correcting any leg by at least 61.8% on the way up, creating another huge bar tab coming due, treating this entire rally as one leg. Not a precise attraction, probably not going to be the exact low, but an attraction at 40, and really when I use pivotal extremes, more like 43. But getting in the realm of some other attractions, lower prior highs, other unfinished business. So all bullish, potentially bullish to ongoing rally. Down some it is 55.60. Amazing, Adobe's still down. I mean, I certainly understand and appreciate airports, airlines being hesitant to reinstate operations without the greatest degree of certainty. But for an Adobe not to have released or have integrated the update that Microsoft and CrowdStrike claimed to have released hours ago, I'm really surprised. Not surprised if it's a much more substantial break. Maybe the bigger they are, like the bigger an Adobe is, the more systems have to be reset, the more walking back needs to be done. But Adobe has had no update published since, 7 hours ago? So I just kind of suspect that they are still flailing about. So just to point out what other influences are going on today, we've got Friday factors. Friday morning's bias was an invalidated bias, so it's irrelevant. But there are other Friday factors, other influences that we'll be monitoring for. Also, the wet X. We had an actively bearish input of the two inputs for the wet X indicator, the Wednesday expiration indicator. Wednesday's indicator was bearish, and if this afternoon's bias window, if the 120 to 230 bias window ends lower than it is entered, that's really simple. Just compare the 230 price to 120 to that price. And if it's lower, then that will complement the initial wet X input, and we'll anticipate Monday morning trends down too. Everybody understand how that works? And I'll be talking it through, of course. So we've got Saturday review tomorrow, but just a sneak preview here. What other influences are coming? Not a lot Monday or Tuesday. I mean, there's reports, but nothing high profile, reliably influential. Durable goods and GDP on Thursday and PCE on Friday. That's going to be very influential. And of course, earnings. Our next week's earnings, yeah. Here's next week's earnings calendar. Semis on Monday. UPS, an economic indicator of sorts. Tesla, Google on Tuesday. AT&T on Wednesday, another economic indicator of sorts. Autos start coming out. IBM. Airlines always just gradually report. They stagger them. Pretty busy. So this is a trending session, trending into the noon hour, entering the noon hour of a trending session at the trend extreme is pretty reliable for producing a fresh trend extreme. If not during the noon hour, then a corrective bounce would likely fail and produce those fresh lows anyway. Notice RSIs. RSIs are actually improving. It's not very perceptible, but they were on the cusp of being oversold in the 3-minute, now diverging positively versus that 1 minute clearly oversold, now diverging positively. So if short here, a reason to tighten stop, lighten exposure. It's not a very durable low. It's more of a close quarters double bottom. You can always re-enter short. Question on Tesla. Uh, 244 support. So not very influential. I mean, that is support, but it's not being very influential. It's room for noises being tested. This has a very productive buy signal down here at 184.85. So very sloppy, choppy, not surprising. What would be surprising if suddenly this substantial productive rally abruptly peaks and reverses back down. That's highly unlikely. So a little bit of basically absorbing the shock to the system. Call support 238 to 244. So dips into 238, 244 should bounce and ultimately launch a higher high, structurally at least a fresh high, 272. 237, 244 dips should hold, ultimately bounce, and cumulatively produce a fresh high, at least 272, but in practice, often more productive than that. Just structurally, though, once there's a fresh high, there's a fresh high. All right, I'll have bias parameters. Afternoon bias parameters available momentarily, but notice right at 11:30, prices bottomed. I don't like this. Again, I still don't like this as a durable bottom. Here we are coming into a new timing window. I also don't see big consecutive up bars. Not really. Not really. Here's two up bars, big up bars separated by a minute of consolidation. That's fine, but it's not just the outright explosive upside that we would expect to see if sellers are truly spent. Nevertheless, I like the area. 55, 60, 63. I like that area of support. It's tested. It's thoroughly tested, even probed. Pullback limit is 70.50. So optimally, we would get retest of the low during the noon hour. I'm not going to position for that until a pullback limit is violated, and then I'll have a sell signal as aggressively placed as possible for the potential to retest the low during the noon hour. That would be the optimal setup. But meanwhile, there's that running correction, having been productive, now being retested. Big line in the sand at 55.80. I suspect that a sell signal is going to be somewhere around 66. And see if the pullback limit's even violated or tested, so we can identify where its low would be. But give this a minute, I'll be right back. the break back above 65.2 has extended to 60. Wait, let me get the full view. Remember what we're aiming for here, or limited by. So about 66.4, 66.5 on the way to 66.750. Even though the break under 64 didn't, or 64.2 wasn't maintained for 24 hours. Still not a position of strength. If you want to give it a benefit of the doubt, that's fine, but and 66.750 is calculable as the peak of a corrective bounce. Anything higher, not a corrective bounce. Holding 66.750 and reversing down from there, likely to extend more substantially. We could be looking at this in retrospect in several days and seeing a reaction down from 66.750 that was tested off this position of weakness, because the position of weakness, even though it hadn't been maintained for a full 24 hours, nevertheless did break under 64.2 and consolidate. Back under 64 at any time is bearish. But apart from that, giving a little leeway here. Be right back. So that was a pretty big correction. You can see it more clearly on the 3-minute chart. Pretty big corrective bounce. Again, I don't like this. When I see this formation at an extreme, not really anticipating anything durable to come of it. No matter how substantial, it's more like a close quarters double bottom that's all but required to be retested. This has been retested now. 61.8 retracement of this little range being tested. These are inverted actually. That's at 65.57. But more importantly, we're probably not going to be holding there. A probe of a fresh low is much likelier. Bounce limit is 60.25. And if bias, and there you go, fresh low. So if bias down is triggered, of course, then we're targeting 48. 48 is just the bias down target. We could extend to 43.40. $48 being the minimum, 43 being the likely, room down to 55.40 as well. And even then, remember, this is not something new. This is over a week of checking off boxes of a top forming, trend change on Wednesday, confirmation yesterday, expiration today. That's just going to take hold. Now, does that mean that bias down triggers? We still have to trigger bias down. I'm pointing out here's the downside if, in fact, at 120, the bias down signal triggers. If 63 were recovered, and by the way, bounce limit is 56. If 63 were recovered coming out of the noon hour, or not too much past that, then and only then would I suspect that maybe sellers are done for the day. Maybe. Kind of tough when we're so far under any prior low, though. But just to have basically a fail-safe, or really to indicate here's how much room there is for a bounce without it yet gaining traction for the effort. Structurally, the minimum is done. Structurally, the minimum requirement is satisfied with a fresh low, a retest of this structure. So until the bias down triggers at 120, which it's premature now, but at 120, if the bias down triggers, then that will put into play more lower objectives. Right now, for all of the downside objectives that have been put into play, structurally a fresh low was the only outstanding requirement, and that's done. Kind of an even atom double bottom. They don't tend to hold when they're in reverse order. So count the minutes, 3 by 3. The 3 by 3 test. Minimum 3 ticks to start the countdown of 3 minutes above a bounce limit. If we're anywhere near the high at the end of those 3 minutes, or if not, you can always put a limit sell wherever you want it. But at the 3-minute high, let's say this is the 3-minute high. 3-minute high at 62, 1 or 2 point buffer, room for noise above it, say 62, 63. If I could get a sell in at 62, 63. Usual attention span of weak candid counter trend sponsorship. No requirement to retest the low, but really a likelihood of extending down, just resuming the decline. All right, any questions, please ask. So right back down to the low, bouncing and back down to the low. Look at this. Can you see this low? It's a higher low. It's just kind of hovering here above the prior low. There's no bullish reason for that. That's optimism, and that's no place for optimism. From a contrarian perspective, that's bearish. So as we get closer to 120, still not close enough to be assured that a bounce won't take us out of this bias down in time. But right now, we can only trade the probabilities. What's in front of us is bias down forming. If that maintains through 120, it'll be a bias down, putting into play the bias down target at 48. That's the likelihood, or the minimum. The likelihood would actually be to exceed it down to 43, if not also 40. If bias down triggers. Not if it doesn't. All right, so now more than 3 minutes out, it is a bias down renewed. As of 120, the bias down target at 48 was being exceeded, so it's a renewed bias down. I think we're anticipating 43 and met now, 40, all but met. Quick look at the bigger picture. So pivotal uptrending support, this isn't actually precise. It's about a little bit quicker. Pivotal uptrending support being tested, lower prior highs being tested. We keep getting lower lows as prescribed by the pattern, but that doesn't prevent a bounce, and as late as it is, just a classical counter trend bounce. I really have no requirement for anything lower. The bias down target was a likelihood. The 43 was the next lower attraction. It's a gap fill. That was, I'm sorry, that's where it is. 48 was the minimum. 43 is the likelihood. Room down to 40 just while testing it. But the bias down target is met. Exceeded, but met. We haven't yet hit 130, so be aware, not unusual for a day like this to invert. So it is counterintuitive. I am going to be positioned for a counter trend bounce. Really just into the 61, again, 63 area, plus and minus. But meanwhile, first things first, count down the bounce limit. Count down the bounce limit test. 3 minutes worth. We're there. Anything higher by 1 or 2 point buffer room for noise, real attractive short entry, because it would be so close to where we'd know it's wrong to be short. Doesn't make it any likelier to resolve down. RSIs aren't oversold, or I wouldn't even be entertaining this. Looking at 50-50. 55, 50, 50. And this being a Friday, be aware any kind of upside can get pretty caught up, squeeze-like, Why is there a question mark on 5428? Are we talking about unfinished business? There was a suboptimal setup. I don't recall exactly why. We could go back to the post to look, but the setup was suboptimal. I believe that was no bias trending. No bias, a bias up signal had been 5428. I'll check on that. What was that date? But it does mean it was suboptimal. I just don't recall exactly why that was. So there's the 3-minute high, and it held so far, but it hasn't retraced. I'm willing to get long this. I'm willing to get long this. The bias down target is met. We're not extending. Just looking for a corrective bounce. Maybe it develops into something more, this being a Friday, let alone expiration. But apart from 40 specifically, which is not which is really just the room for noise, 43 being the likelier objective, 48 being the minimum, all being overlapped here. I'm willing to get whipsawed out of a long, right back into a short for the potential that something more substantial to the upside is forming. Well, there was literally room for noise down to 55.44. Anything lower would have started to trigger a sell signal. For the first time, the 3-minute probe, minimum 3-tick 3-minute probe above the buy signal, 5150, is actually being probed as well. It's the same setup, it just has this extra little hop. As I said, I'm willing to get whipsawed out of a long, but continue giving the long benefit of the doubt. If it'll be triggered, it's being triggered again. Tested at least. And that's in this timing window, by the way. That's in this particular timing window, the afternoon bias window, the PM bias window. As we start to round the top of the hour, if this isn't yet productive, it's probably not going to be. So we really need to be productive much, much sooner rather than later. Once we round the top of the hour, start coming within view of the bias window lapsing. Remember, expiration is one big position scoring window, really. So as we start coming out of the PM bias window and into the final hour, sitting at new lows on expiration in a trending session. If this is just a corrective bounce, it's done. All right, but still giving it a little bit of room, a little bit of time. 63 area objective. Be right back. So it's approaching the top of the hour. Don't get married to this. And actually, I should look at this as a pullback limit being tested under 53.50. 53.25. So we've got a 3-minute low. 1 or 2 point buffer, room for noise. Any lower gets us to about 49. So if you wanted to give this buy signal any more benefit of the doubt, which it deserves, we're not yet at the top of the hour. Again, if willing to get whipsawed out of this signal, willing to get whipsawed out of this one. Same timing window, same setup. I don't want to be long under, at the very latest, 48. In fact, 48 starts to become an inflection down. $47 right now. So it's not that close right now, but the lower end of this at 50, probing it down to 49, that would be pretty close to where we'd know it's wrong to be long. Doesn't make it any likelier to play out to the upside. It's just that much closer to its stop, so it's that much less of a loss. Then compound that with there is potential to play out to the upside. So we've really rounded the top of the hour. Double topping in here potentially. I don't see RSIs getting overbought, so it's not like buyers are stretched, but they're also not. So they're not breaking a sweat, in other words. But that's also to say they're not breaking a sweat, not really getting involved here. So just really looking at a little bit of an uptrend, kind of a pivotal uptrend. In any case, the last relative low, the low of the double bottom, also a 3-minute low to testing the pullback limit. 1 or 2 point buffer, room for noise. Works out here to about 51.50. So this may be the most that buyers can do. Tighten stops, lighten exposure. It's not over yet, the influence. It's just getting kind of close, especially for expiration to really be basically dancing on the edge. And then there's the alternative that this could start breaking higher. If sellers don't regain traction, there's certainly a path higher as well. If this if this bias window lapses in rally mode instead of ending a corrective bounce, then the rest of the session gets squeezed up. There's a return to the high, so now the pullback limit basically repurposed fresh high. So not high enough to calculate a new pullback limit, so now the pullback limit gets to be tested for the first time again. But under the prior low being 53.25, really no reason to be long under 53. Be right back. So they gave it all they could, and I'm actually going to start the measurement from here as we approach the final hour, the bias window lapsing. If I measure the breakdown off the high from 57.50 to my inflection, under 45.25, if 45.25 is probed, that should be a point, basically a point of no return. And there's no assurance it's going to be probed, but under 45.25 would start to signal that there's no other bounce, not just no other bounce, not expecting just flat line here, but that the final hour just basically ticks down. Not at any particular slope, but down. So we haven't gotten there yet. Bounce limit is 49. And the objective, so long as 43, so 43 has only been overlapped. So long as 43 is broken, so long as 43 is broken, the next lower objective, basically we're coming out the lower end, is the whole 5509, 5504. Not necessarily today, but not necessarily not. Not today. But it's really tough. This late in the day, still sitting at lows. The bias window lapsing. It is Friday, so the Friday PM drift plays as well. That is on a Friday, exiting the PM bias window at 2:30 to 3 o'clock, exiting under the noon hours low. So noon hour low, basically 53, 2:30, probing under 53, maintain the probe going into the final hour. Doesn't need to be improved. We don't need to deteriorate further, but just don't recover 53 by 3 o'clock. And then the Friday PM drift plays. Friday PM drift, regardless of the other influences, for instance, regardless of any influence that suggests we're not going to flatline, assume flatlining is an option. All the Friday PM drift says is, in this case, that buyers are marginalized. Buyers are marginalized into the close. So it doesn't point down by process of elimination. It leaves two possible scenarios, pointing down or flatlining, because buyers would be marginalized. That could also play out with a bounce failing. So a bounce would still be possible, but we'd fully expect it to fail if it did develop. But that's the Friday PM drift. Now, if we have other setups, which we do, that suggest we're not going to flatline, you see how it works? By the process of elimination, we get rid of certain scenarios, and we're left with other possibilities. And that's all we can trade are the possibilities. So if we have the inputs that tell us what to rule out and we know the universe of possibilities, we know what we're left with through the process of elimination and any other tips and tricks. So, for instance, pullback limit here, maximum pullback limit 57.50. Whoops. Inflection under 51.50. 45.50 being probed. 45.25. Really just being overlapped, mostly just being overlapped at this point. However deeply it's being probed, it's only being overlapped. Once we get any detached bars under 45.25, not printing 45.25, then we'll have suddenly a much greater degree of likelihood for trending down. Bounce limit is 48. All right. Any questions? Please ask.
downstairs is mostly your office and even the
So I'm not really wild about where this is coming from, this little bounce. It's not actually a little bounce, but remember we were just still overlapping 45.25. We're now looking at 3 minutes of counter trend detouring. So this needs to hold. If this intends to extend down and finish exiting the bias window, remember the bias window needs to lapse, go into the final hour under the noon hour low. What's the noon hour low? Noon hour low is 53. So the bias window started lapsing at 2:30, under 53. We still need the final hour's entry to be under 53. And here we're testing 53. I wouldn't be concerned with this bounce if it had originated from under 45.25, not from overlapping 45.25. And it is overlapping. The low was overlapping 45.25. But we do have a count here. Bounce limit, minimum 3 ticks, 3 minute probe, 1 or 2 point buffer, room for noise. If this is going to extend any higher, it's going to undermine the Friday PM drift, the bearish Friday PM drift. And if it undermines the bearish Friday PM drift, it opens the door to reversing up because, remember, process of elimination, we don't expect this afternoon or the balance of the session to just range sideways. We anticipate that the final hour is either going to bounce or extend down. And extend down if the Friday PM drift triggers, which is now being threatened not to, let alone if 45.25 were broken, which it almost was but wasn't. So I'm long above 55.50. 55.50. No upside attraction, just upside. Meanwhile, this is a really attractive short entry. Why is it such an attractive short entry? Well, because we haven't yet rejected the Friday PM drift, the bearish Friday PM drift. We're sitting right at this pivotal spot. Totally separate from that, this pivotal spot is the 3 minute high to testing a bounce limit, the usual attention span of weak-handed counter trend sponsorship. That's all they can do if it's just counter trend. If it's not counter trend, if it's the actual new trend, they're going to do more. I don't want to be long higher, not too much higher. Stop, and reverse to long above 55.50. Doesn't make it any likelier, this pricing doesn't make it any likelier to resolve down. It's just a more effective method to deploy capital to opportunities. We've already created the opportunity or identified it because of the setup, the Friday PM drift setup, etc. So now we're looking for where to enter. Trade selection. So this is the maximum, and so is a little bit higher. The difference between 55.52 and 55.55, well, it's 3, right? It's actually nothing. To me, it's nothing. It's the same price because it's the same range. It's the 3-minute high and a 1 or 2 point buffer room for noise. So anywhere I can get a short off in here, not always going to get the opportunity to get it off any higher in that 1 or 2 point buffer. Often the 3 minutes will not have been spent entirely counter trending, the usual attention span of weak-handed counter trend sponsorship. Often that will already be retracing. Now, there's nothing bullish about taking its time reversing down, so be aware, be prepared. And by the way, a stop here, if you're not already positioned with a stop and reverse to long SAR, this can't be done mentally. It has to be a resting stop. The order has to be in. This is an inflection point. Inflection points don't always just slide through. They may react, or they may aggressively trend through. So if this is valid, 55.50, 55.50, if in fact this is not going to resolve down, this may literally or almost literally explode higher. You're not going to get off a mental, you're not going to get off a mental stop, not anywhere close to that trigger. And if it turns out to be whipsawed right back out, you can always re-enter long if it comes back up. So the inflection, the buy signal 55.50 is being pierced by a tick. It's just being tested as resistance. If it's probed by 3 ticks, that starts a 3-minute countdown. If there's a 3-minute countdown testing it as a buy signal, during that, there it is, 3 minutes. During that 3 minutes now underway, a sell signal is disqualified from triggering. Can't be doing both. Can't be testing or trying to trigger a buy signal and triggering a sell signal with the same bars. And sometimes we miss the reversal, but like this could just suddenly reverse right back down, and we miss it because we're not going to honor a sell signal in this window where the first 3 minutes are allowed to probe the buy signal. But notice, what did I describe? That this almost literally explodes higher. If this is going to be probed, if it's not going to hold as resistance, the likelier scenario is that it almost literally explodes higher. Here it is, almost literally exploding higher. So we entered the final hour. The final hour entered back above the noon hour's low. Friday PM drift is off the table. Also, we entered the final hour trending up, not down. We're still in a range, but unless something dramatic happens, literally a dramatic reversal down is necessary at this point to put sellers back in control. I'm not going to dismiss that potential entirely because, as I said, we're still overlapping a prior high, the prior high. But if this continues to improve in the next few minutes, then it is flat or flat to higher. And flat, not very likely. Pullback limit is 58. There was a PM blog. Maybe I should repost it here. The site's up. Oh, okay. So let me just focus on this for a moment, and then I've got a update about the update. Pullback limit is 61. So now, pretty likely that sellers are marginalized. Pretty likely. Still a pretty critical spot right here. So, and the critical spot being tested right now is actually a cluster around 63. So long as it's just being overlapped, it's not yet being exceeded. Not breaking higher yet. We're still, this leg is still overlapping the prior high, so we're not out of the woods yet. This is not very aggressive at all. This 5350 sell signal is not at all aggressive. It's not intended to be. It's really just to illustrate, here's how much room there is for selling pressure without reversing down. I'm going to get more aggressive though. When I move this any higher, it will be actionable. I am looking at an email from my admin. Apparently the email alerts have been sporadic. It's not necessarily, no, it is. I'm not clear. This isn't clear whether this is part of the outage or not. But I'm going to force that through the later update. And we'll still have one more update coming. Speaking of which. So not out of the woods yet. Let's see how this pullback limit does. Pullback limit's minimum 3-tick, 3-minute low. It's just overlapping, but still 3 minutes down to 55.60. I am raising the sell signal to 57.50. I could be even more aggressive than that. I'm just not going to be since we're above a prior high. Since we're entering the final hour in rally mode. Be right back. All right, so here's our corrective bounce line in the sand. 66,750. 66,750 is met. 66,750 can be overlapped until 66,750 is decisively probed, and that probe is maintained for a 24-hour window. This is the line in the sand that defines this bounce or keeps the door open to it being just a temporary correction. A temporary correction meaning that the origin of the bounce, and the origin of the bounce is way back here at 53.5. The original knife catch that I put a buy on as a knife catch, not as a durable recovery. But the premise being that this is just a correction from 53.5, looking for a retest of the low down to 51. $66,750 now met. Is it coming from a position of strength? No, because of all the time that was spent under 64.2. Doesn't prevent a bounce. And it doesn't prevent this from extending even higher, but the burden of proof back to sellers as to whether this is just the upper end of a trading range. Corrective bounce before resuming the decline. Not just to retest the low to 51, but to actually extend into a new down leg. New lows, 40s, 48. So this is it. This is 66,750. At this point, 65 is basically 65.1, 65 would basically signal the first possible signal that upside momentum is lapsing. That's spot. Three-minute RSI is still refusing to become overbought. 1-minute RSI diverging negatively, or at least a lower overbought on this single tick higher high. Pullback limit, 3 minutes, usual attention span of counter trend sponsorship. Weak-handed counter-trend sponsorship. Usual patience of strong-handed buyers, letting them have that rope. Raising the sell signal to 55.58. So at least this little dip just tested the prior high from above, higher or a lower prior high. Next opportunity to prove out the recovery is a fresh recovery high above 66. Now, we'd expect to see that this unfolds to the upside as basically as a universal awareness window, session, bar, in this case window. No more backing and filling. No more consolidations, just trending straight up. That means that we can set tight stops, let alone sell signals, because there wouldn't be any bullish reason to dip too deeply or even to delay much. All right, so there's two kinds of signals. One is timing and directional and contributing to initiating or opening a trade, and the other is contextual. So, for instance, a measurable or inflective or structural recovery or reaction, we can organize or form entry parameters from any or all of those. Some of those also and other setups really just tell us here's the health of a move underway. Here's therefore instructions on how aggressively or not to tolerate a reaction. So for instance, this bounce back above its last relative high shouldn't happen unless, and there's no 100% of course in trading, shouldn't happen unless this is a strong-handed move. In fact, it has gone on to be productive with higher highs. A dip back down to this lower prior high and then a higher high. Having said that, and I'm sorry, while I'm talking, we're actually doing something here. Yeah, it's not much. 60.25. I'm raising the sell signal a tick to 60.25. Having said that, and what I did say is shouldn't. This is the behavior of strong hands. Fresh high. Back test the break that created the fresh high. And be productive. Produce a recovery back through the origin of that back test. Strong hands. At some point, strong hands are satisfied. So this is telling us, since this is strong hands, we really want to be aggressive on, or at least not tolerate much of a pullback. That next phase should be an awareness, a universal awareness phase, in one direction or the other. And the default is up because this is gradually improving, recovering this prior high, maintaining the back test, retracing the origin of the back test. Higher and higher highs. Where's our universal phase? Universal awareness phase isn't coming. The 3-minute low is being probed. So we could actually have been a little bit more aggressive. There's not really. 63, just way too tight in here as an alternative. But really as a preliminary sell, 63 was likely to test 60, which has been done. The real inflection, though, the real reversal signal is 60.25. So because sellers, or because buyers in this case, did everything they could do and still are not avoiding a pullback limit being violated, a prior low being probed, there's always a bigger predator. There's always stronger hands. There's never 100%. And this is intended to tell us when stronger hands are appearing. Without this reversal down, if not for this 6-point, 5-point dip, the market could be 10 or 15 points higher. And it may be on its way to another 10 or 15 points lower because of that. Not everybody is synced together, but they eventually follow each other like a school of fish. And now sellers are under basically the same countdown, not a minute by minute countdown, But checklist, just as buyers recovered a prior high, held a back test. The back test was productive, recovering the origin and higher. Needed to hold its pullback limits test and produce a higher high. That should have been the awareness, the universal awareness leg that would have almost literally exploded higher. Instead, it's almost literally imploding lower. And there's actually another pattern in here that triggered under 63. It's too tight for my discipline. I want at minimum 1 point, no more than 2 point buffer, room for noise under the 3-minute low. 63 based on another pattern that just would have been too tight. But it would have been a preliminary telling us that the 60-25 trigger was likely to be tested. If you're going to be whipsawed out of 60-25, why not already be in at 63? Anyway, we weren't. But the point is, 60-25 is being probed. It's established its own 3-minute low. Now working on a 1 or 2 point buffer, room for noise. So as I said earlier, sellers are probably marginalized. Unless something very dramatic happens, this has to be dramatic. It could have been so dramatic earlier as to have avoided the higher highs and just managed to trade down through the proxy window, for instance. This should enter the position scoring window. Remember, Friday afternoon or expiration is really one big position scoring window. But there is a position scoring window nonetheless, with a more intense focus on the impending illiquidity. So we should see this now accelerate down. Any bar that is not fitting the description of accelerating down is the same as these bars that were undermining the upside. Too deep of a pullback. So this should be a very satisfying slide. Not necessarily at fresh lows. The destination should be fresh lows, but the pattern is optimistically short, stopping optimistically short. It was always going to fail. The question is from where and when. Bounce limit is 53.25. And it doesn't have to come right down to within a tick or two of the low to stop optimistically short. It can stop a couple points short of the low before it touching the prior low and still be basically optimistically short. Still in line with the pattern of not actually returning to the prior low to complete a bottom. Bounce limit is 50-50. So similar setup. Because the context is so bearish, because this is presumably the universal awareness leg, it just happens to be pointing down. Because this is the universal awareness leg, it shouldn't bounce. Any bar that bounces should resolve down, or the next bar should be down. Therefore, stops can be tighter. So this is not a directional or timing tool. This is just contextual, telling us from a process of elimination what not to expect. And therefore, if it appears it's not in line with the general direction of our signal, it could develop into something brief or protracted and extended. Rather be flat, waiting for that to settle out, than trying to nurse a position that's literally heading the wrong way. So also notice on the 3-minute chart, just glance over here, you can see the bias parameters. Forget about any predictive value. They are going to be influential anyway. There's support and resistance, always. And we've come right down into the bias down target at 55.48. And bouncing. So I wouldn't tolerate this bounce too much if you're not normally very aggressive. I would try to be aggressive with this. You can always re-enter short. I don't know if this is going to develop into flat to higher, squeeze, or at least retracing. It doesn't even need an influx of buyers. It is expiration. Just another analytical overlay. For instance, just the mechanics of expiration is we're in the position scoring window, and we would expect to see a steady flow of whichever way expiration is leaning, if it's leaning. And we're several minutes into it, and it's already been productive. Getting into it. Starts at 337. Since 337, we've basically flatlined. So since entering the position scoring window, nothing. No lower low. So I wouldn't tolerate much of a bounce here. You can always re-enter short on a fresh low. So if we knew that this were accumulative or had potential to snap back up, which it does, but if we had some way to quantify that, I could establish risk-reward parameters and determine if an entry made sense versus the risk we'd have to take on. But in this window, we don't have that. But if you're still tolerating, or if you're tolerating too big of a bounce, say above 55, I can't assure that that's just going to add a few ticks, a few points, or a couple dozen points. Probably not a couple dozen. Usually on expiration, entering the position scoring window, any trending that the position scoring window produces tends to be pretty relentless. However steep or shallow its slope still tends to be pretty relentless. But since we entered the position scoring window, there's been no lower low. Only overlapping, if that. I'm still giving sellers the benefit of the doubt because the bounce limit is holding. There are other factors than just expiration. But I especially want to see sellers productive because we're sitting right here at a very relevant support. And in an area that maybe not, or maybe from lower, but has been forming bottoms previously, multiple times. All right, now we have a pattern. So now we have a pattern as we start Friday's market wrap. Expiration. Ever since we entered the position scoring window at 337, there's been no further deterioration. As an indicator, until that is dislodged, until it further extends all this selling pressure that developed prior to that. The likely scenario is just to trade flat into the close. That's not to say that all or a portion of this drop, this very late drop, can't be retraced, or that the entirety can't be reversed, but there's no signal to that effect. There would be back above their interim high. Yeah, back above 55 could start to reverse up, but there's no target for it, just to know. There's no target, if there's no objective or reward, there's no way to judge what risk, whether the risk that you need to take on even comports with your own risk tolerance. Is it a 1 to 3, 1 to 1? But in any case, considering that this is expiration, considering the proximity to support, the pattern of dips into this area bouncing, and the very limited time remaining in the session, I wouldn't tolerate much of a bounce. You can always re-enter short on a fresh low, and then you don't have to if we're too close to the close. If we're still sitting here at the final minute, it wouldn't be surprising to see price start sliding again. But don't tolerate too much of a reaction. Meanwhile, $55.40 is really the room for noise under 43. 48 was the bias down target. It was the minimum. 55.43 was really the likelier. 55.40 is the room for noise under 43. 43 tested and responsive a couple times, but not ultimately. So there's nothing here that suggests a bottom is in. In fact, to the contrary, since there's a high, there's their interim low, whether it's this organized test of uptrending support at 56.77, or the overlap that came in very late that day and recovered into its earlier range at 66. Just closing under it on Wednesday triggered a trend change. Closing under it again on Thursday confirmed, requiring at least an eventual third lower close. Today could have bounced, and we would have been expecting a third lower close eventually. Well, we've already got it. So that signal is useless now, the trend change signal, because it's already produced its minimum objective. Well, actually, it's a new trend I just described. That's a trend change. That means this is a new trend. This is a new trend extreme close on a Friday. new trend extreme close on a Friday, whatever the trend, now itself as an entirely new and separate setup requires at least an eventual lower close. Totally separate from the trend change, but based on this being a new trend. Because we're clearly going to produce a new trend low close, even if we come out of the weekend bouncing sharply, we'll anticipate that any bounce is temporary on its way to a lower close. Maybe 100 lower closes, but at least one more. I'll also say as far as WEDX goes, the Wednesday expiration indicator. So Wednesdays, there's two inputs, WEDX1 and WEDX2. WEDX2 already developed. WEDX1 was actively bearish, closed under a prior low. WEDX2 is this afternoon's PM bias window. It's entered at 120. And it's exited at 2:30 to 3 o'clock. And it was higher. It did not trend down. It did not complement or confirm Wednesday's actively bearish input. So we don't have a WEDX. WEDX did not trigger bearish. And it's actively bearish. WEDX1 means we can only look for a bearish setup. And it's not as bullish as it would have been bearish by default. Nothing like that. Having said that, if Monday's open gaps down, in other words, serves by proxy, as if today's close were lower, Monday's open gapping down under today's low, maintaining it through the first 15 minutes, and further deteriorating through 9:45, serves by proxy as if today's close was bearish. It's not a direct consequence, but I would give that WEDX a benefit of the doubt anyway. Suboptimal, but not bullish and potentially bearish. But that's it. As far as bigger picture, we're going to do the bigger picture tomorrow at Saturday Review. Join us. I'll send out the URL. Hopefully Adobe will be back. It is still off, and their last update was at 12:30. And the one prior to that was 8 hours earlier. They're not... maybe they're not aware. Anyway. You know the thing. Okay, any questions, let me know. Meanwhile, Bitcoin extended its bounce and is still extending its bounce to 66,750. That's it. That's the maximum that this bounce can extend and still qualify as a correction of the ongoing down leg, or just the upper end of the range, a multi-month range. Doesn't have to be a new downtrend to be treated bearishly near term. We're not looking for the demise of or any existential threat to Bitcoin. Just that it's more in an accumulative phase or sideways ranging phase, and this is the upper end of it. Or not. Start probing above that resistance, and I don't mean just overlapping as it is, with room up to 67, which is being taken advantage of as well. But actually trend through it extend through it beyond a 24-hour window, and its break is on 51,000. No requirement to return to it. Maybe even resuming the rally, returning to the upper end. But we can look at this in more detail tomorrow. There's really nothing to add. I'd like to see what happens when institutional doors are shut and this surge, this optimistic, sentimental surge, depends on retail buyers to support it, let alone extend it. See if that can be maintained. It's not a great spot to be greeting or to be losing a lot of potential sponsorship that just isn't going to be trading over the weekend while others do. Price is free to fluctuate, and it can fluctuate right back down. But any questions about that, let me know. Pound reversing down. This doesn't have to become a new down leg. This may very well be hit again by another intervention. I would. Bob Rubin would have. Robert Rubin, sorry. Treasury Secretary under Clinton. The only master of interventions. No other intervention ever sticks. So this one, the last two, doomed to failure. Dollar rallying, finally getting a flight to quality, flight to safety. Gold and silver, we did a protracted discussion, but to get it on the recording, this is a candidate, pullback candidate. It's a little excessive, more than it needed to be. Let me take care of this real quickly. Bounce limit is 48.75. Didn't have to be this deep, but it really can't be any deeper. As a correction, not that a reaction down wasn't anticipated, but not necessarily to this degree. In any case, there's the pullback that returning to the upper end of the range after a relentless uptrend was likely to produce. Simultaneously, silver, which had already started breaking yesterday, very critical support as far as avoiding the next lower attraction, in this case the next lower attraction being 29.95. Returning to its original buy or target, downside target. Total reset. Remember, silver had outperformed gold. Gold basically playing catch up to silver while silver hovered down here. Now they're both resetting. They're both pulling back simultaneously in unison, possibly syncing up. That's where the stronger rallies come, not from one rotating into the other and fueling the other, but really from a broader based buying into the sector, into that complex. So nice pullbacks. I wouldn't tolerate any additional pullback. This needs to have been the low. We need a 180 degree paradigm shift in sentiment. But good opportunity for a bottom. Any upticking in both simultaneously, especially if aggressive, is entirely credible for extending their rallies. Long bond, really just waiting for 117.5. Been patient. I don't know that we'll need to be patient much longer. It seems like it should start to be obvious. Breaking under their interim low, the interim low of the two highs. We didn't even have two highs originally when that pullback limit was created. But now we have two highs and an interim low. And crude oil tried again to invalidate the sell signal, targeting 78.80, 78.75. I said earlier, I didn't see anything. I haven't, not aware of anything in the headlines or subtextually that might have been a bigger catalyst for the traditional weekend geopolitical risk premium. So not only that, but trading to fresh multi-week lows. Really tough to be bullish this pattern. I've been bearish since this upper end as far as opportunities for this to reverse down. Just to refresh, there's a dip from a fresh high back to lower prior highs of this range. Box, rectangle, lower prior highs. A dip that had bounced immediately would have been bullish. I don't think I'd have been bearish again on that. But it stuck around like quicksand another day as well. That creates a position of weakness so that the subsequent recovery attempt was doomed. I still would have given a benefit of the doubt to buyers if they could have created a close above 83. They never did. And so that made the lower end of the rectangles test likely. So at that point, I can't be bullish until the lower end of that rectangle is tested. And it was attacked, but only now is it being tested. So I can be bullish, but considering all the failed recovery attempts, I'm going to be bearish. So there. So we entered the position scoring window here and didn't deteriorate any further. Maybe some overlapping, but that's it. Expiration signaled it was done. Yeah, I'm just now seeing your comment. There's a latency here. That's why I don't like the YouTube room. But latency here, and I'm just now seeing your comment. Only genius Treasury Secretary. Current crop an embarrassment compared to him. And this is globally, by the way. All central banks. Heavy-handedness versus price discovery. Price discovery wins every time. All right. We haven't had a Saturday review in a couple weeks, so if you have stocks, I've already seen stocks reviews or chart requests, which I appreciate. I'm going to get up to speed on those, and we'll move through them a lot more easily. If you have any that you want to let me know ahead of time. But join us tomorrow at 9:30. I'll send out the link. Hopefully it'll be to the Adobe platform. And we'll also look at the bigger picture, which is a totally new, bigger picture than it would have been last weekend or any time recently. Thanks everyone for being here. Have a great night. Take care.
about padding their own